Today is our brand new 2026 €10,000 portfolio kickoff, and I am revealing the very first stock I'm buying. In this video I will explain my method of picking stocks, and I will explain why this stock is the first pick for our portfolio. Funny thing is, when I first heard about this company, I almost skipped it because of the sector it is in, until I heard about this one number that changed everything for me. The stock is Oscar Health, ticker OSCR. It is a healthcare insurance company that is quite tech-heavy. For example, by using AI for cost reduction and an online platform for customer interfacing. But the real question is, why is this my first pick for our brand new portfolio? And what is that one number that I mentioned? I'll reveal that in just a moment. But if you're new here and wondering why this channel is different, then check out our introduction video where I explain the purpose behind this portfolio and how we combine smart investing with real impact. The link is up here and in the description. To explain why Oscar is the first stock I'm picking, I have to explain my method of stock picking first. So let's dive in. I don't pick stocks because they are popular, have momentum, or because there's good news about them. My method is all about the numbers. Let me ask you a question. Which company metric has the highest correlation to the company's future stock price? Said another way, which company metric is the best indicator to predict where the stock price is going to go? Studies have shown that the answer is earnings per share. And for future stock price, that of course means future earnings per share. So what I do when analyzing a company is make a long-term projection of future earnings per share based on past earnings, the trend in those earnings, the next quarter guidance, and assumptions in growth slowdown or pickup beyond the next quarter. I try to be as realistic as possible on those numbers, and I do that for every company I am looking at as a possible buy. It is a must-have for me. If I can't make an earnings projection with any degree of certainty in the numbers, then I will not invest in the stock. Now, what helps me immensely with future projection of earnings is if the company gives some kind of longer-term guidance. Not every CEO or management team has the guts to do that, so I love companies that do. And that's where today's stock, Oscar Health, comes into the picture. So let's take a look at that. Now, it is widely known that the healthcare insurance companies have had a tough time in 2025. Their medical loss ratios have all gone down substantially, which basically means that their profit margins have been compressed severely. Oscar Health has been no exception. Just when their earnings were starting to trend positive in late 2024, their margins went down dramatically and their earnings went back down negative in 2025. However, in the Q2 2025 conference call, the CEO, Mark Bertolini, guided to a return to profitability in 2026 and a $2.25 earnings per share for 2027. And that was the number that caught my attention. Now, they have been a bit more cautious on the $2.25 statement in later communications, but they said in later calls that they also didn't want to drop that target and will update us this year on progress in getting there. And that at least shows which numbers are in the back of the CEO's head as a target. Interesting is that they also stated that these targets assume that enhanced ACA subsidies might not be extended, something that has indeed happened recently, causing the stock to sell off. Going to their revenue, that has continued to grow in 2025, further cementing the case that they have reached enough scale to make it a profitable business once margins increase again. They were already turning profitable in 2024, and revenue has strongly increased since then. So now turning towards the earnings per share projection and the future stock price. I think Oscar will manage to return to profitability this year. I am estimating them to make about 90 cents of EPS for this entire year. Now analysts, according to MarketWatch, already have them doing 63 cents of EPS on average in Q1 2026. And they are estimating Oscar to do $1.04 over this entire year. For next year, they have them doing $1.80 of EPS. Now their own target, as said, was $2.25. So you could use that number for a bull case projection. But for a base case, I think the 180 is quite realistic for next year. And from there, the 225 should be achievable in 2028. Especially since their revenue growth is expected to continue at about 15 to 20% for the next years. So that is my assumption, 225 of EPS in 2028, a year later than what was the CEO's target. Now to get to the share price, we need to estimate a PE multiple for Oscar. The healthcare insurance space never gets big multiples like tech or SaaS companies, mainly because their margins are much lower and can fluctuate a lot. That causes their profitability to also fluctuate a lot. Last year was an excellent example of that happening. That is why the average PE of these types of companies is only about 12 to 20. Now I do think that Oscar is going to be at the upper end of that range, mainly due to the expectation of revenue growth for at least the next couple of years. So taking the 225 of EPS for 2028 and multiplying that with a 16 to a 20 PE, I think that the Oscar stock price could be somewhere around $36 to $45 in late 2028. The midpoint of that would be around $40, which would be a fantastic 150% plus upside from the current price of around 15 in only about 2.5 to 3 years. So that is why Oscar Health is the first stock I want to start buying for our brand new portfolio in 2026. I personally don't want to wait too long with buying this one, because I think the stock price could change fast when it becomes clear that they are indeed returning to strong profitability this year. Now, as last year clearly showed, there are also risks with a company like Oscar. The stock is quite volatile. If the medical loss ratios remain very elevated, then the profitability of the company will suffer. If the government changes the insurance rules again, then the member count could go down. They also have competition from other insurers, of course. Just a couple of examples to keep in mind here. So I am definitely not going to put half my portfolio into this stock. But I see the recent stock price sell-off due to the enhanced ACA subsidies not being extended as an opportunity. As said, the Oscar management already took this scenario into account in their projections. So I think the risk reward is certainly there with this stock right now. So that is why I am personally buying here. Also, the price has gone down closer to the support zone of around $14. So to me, it seems like a good entry with a good probability of high percentage gains in the coming years. Please let me know in the comments what you think of the estimated 225 of EPS in 28. What would your own estimate be? So this was our 2026 portfolio kickoff with the first stock I'm buying. It was not financial advice. I hope you enjoyed the video. If you did, then please click the like button. The video of the second stock I will be buying is coming up very soon. It will be a very different stock to Oscar, but it will be similar in one aspect. It will also have high upside potential in the next couple of years. So if you're interested in that, then hit the subscribe button and the notification bell. By doing that, you would also be helping the channel create more impact for nature. I would be very thankful, because good deeds compound too.